Hello, risk managers. Dan Sugar back with you for an update from trend9break.com. Starting off with the daily chart, we did have a pro gap down 2 weeks ago, August 2nd, below a trend line. When you break a trend line, that can be a significant occurrence. When you gap down below a higher time frame trend line, like the daily, that's a pretty big event. And as you can see, it's worked out very well. We had a pro gap down August 2nd, below a trend line. There's the low of the prior day. There's the opening. We came up and filled it on the evening session and then dropped hard. And since then, we've been making lower highs and lower lows. We broke a secondary trend line yesterday, closed below it. There's the retest. So a lot of big red candles on some good volume. Interest rates going up. The market does not like that. Rapidly rising rates. China's had some negative numbers on their GDP, and they're having some issues right now in China. And then the banking, lower the credit, United States credit rating got lowered from AAA to AA, and then Fitch and Moody's and so forth. So a lot of negative bearish factors. We closed below the 50-day moving average yesterday in the cash S&P. So right now the power's with the bears. And the next good demand zone I'm showing is 44.20 to 44.05, and then 43.80 to 43.65 on the daily chart. Here's the 8 hour, also with some trend line breaks as well to the downside. First one drop, little chop and slop in there. As you can see, 45.40, 45.50 held multiple times, like 5 or 6 times the sellers came out, with the exception of one little anomaly right there with a big greedy tail. That's called a topping tail. And then we finally broke down below 44.80 as well. And then again, the next good demand, 44.20, 4400. Here's the 4 hour chart. I like the higher time frames. You know me by now. I don't trade up the 5 minute chart. I can't make money at the 5 minute chart. And if you can, then keep doing it. But too much noise, too much emotion on the 5 minute. Lowest I go is 15. But here's the 4 hour chart again with some trend line breaks as well. Here's one that I didn't put on there yet, but it's right here. Boom, boom, boom. Right. Oops. Where is that one? Right here. Grab those lows. Trend line break yesterday afternoon below 80, below about 88, 44.88, and here we are at 44, 43 right now. So it looks like selling rallies is the way to go. Keep an eye on the bond market. Watch the TLT or watch the 10-year note or 30-year bond. As prices come down, that means rates are going up. So bonds are in a downtrend. Rates are trending higher. Mortgages are still stuck above 7%. Housing's got some issues. So it looks like the bears are back in control. And my advice is to look to sell rallies, watch those supply zones, and watch your trend line breaks. Thanks, everyone. Let me know if you want any information about my 5 hour masterclass. Comes with my free ebook and 90 minutes of consulting and 2 3 hour sessions on my 5 hour, 2.5 hours, excuse me, 2.5 hour sessions on my masterclass, all about trend lines, psychology, position sizing, risk management, and patterns. Reach out at Dan at trendlinebreak.com. Thanks, everyone. See you next time.